Hello, and thank you for tuning in to this week's Stock Talk episode. I am Lisa J. Stocks, and today we're going to be talking about is it too late to invest? That is the title of today's show. And the answer is think again. It's never too late to start investing. Everyone is going to have a different starting point. And we're going to talk about what's been going on as we came to the close of last week. Um, so let me see. Poll question. Let me put my poll question back because I don't see it. So, guys, feel free to ask any questions. I will take some breaks throughout the show as I am sharing on my topic of the day. Let me see. Give me 1 second. And let me go over here. Okay, it is there. Just hard to see things. Okay, so let's get into today's topic of the day. Thank you, everyone that has tuned in so far. I see East Boogie is in the chat. Thank you. So the S&P 500 hit a record milestone for the 7th time only in the last 75 years. And that is something that is notable, but we're going to talk about lots of different things that I want you to have in mind as you are investing. Or, everyone has a different money mindset, and I'm just going to be sharing my point of view on how I think you can navigate any market as far as being on board with your investing journey. Now, the S&P 500 is currently $6,000.36. Just 8 weeks ago, it was $4,982. I'm not going to share my screen too much because I know it's not that very easy to see, especially when I am on vertical. But do you see this? This was April the 8th, $4,982. And do you see the move that it has made up? Things are going to impact the stock market. The stock market does just not move up in a straight line. And we have to be ready for that because investing is a way of building wealth that I don't want anyone to be intimidated by, but we have to be ready for this. So don't ever think that it's too late to get started investing. Thank you for that, Vincent, and happy Sunday to you also. Much appreciated. And let me see. Thank you, David, and everyone else that has chatted so far. So today we're going to continue to unpack what I am all about, investing long term and building your wealth for yourself and your family. Now, when I first, as we just took a look at with the index of the S&P 500, now some ways that I get exposure to it is by investing into VOO as well as FXAIX, and I'm going to just show you that also quickly. So VOO is currently $550 a share. So when I first started investing into this, it was back in October of 2022. And my first investment into it, it was price point of $325. Over the last 5 years, this ETF, which is the Vanguard S&P 500 ETF, is up 96.91%. So we have to think long term because, like I said, you have to be ready for the ups and downs when it comes to investing. And that's the theme of today's show. So let's go through some stats and talk about it a little bit more. The S&P 500 has hit new all-time highs over 1,300 times since 1980. And these are the type of points that I want you to have in mind when I say that it's not too late. Everyone is going to have a different starting point, and we can't think that certain investments there are certain investments that it might be too late on. But when you when you invest into what I'm talking about here, first and foremost, an index, an ETF that tracks an index. Now, this is the Fortune 500, the top 500 companies in the US by market cap. So this is going to change on its own. Back 25 years ago, at the top of the list, Walmart was up there. Now, Walmart is probably down, I think, 25, 30 on the list. It's being led right now by NVIDIA and Microsoft and Apple, but things change. And by investing into an ETF like this, you don't have to worry about that. It does rebalance on its own based on the weighting of the size of the company. So another thing that I want you to have in mind, that you don't have to feel like you have to choose individual stocks if that's what you're waiting on to get started investing. Now, if we broke down all of those all-time highs that have occurred since 1980, that would be about 30 per year if it broke out evenly. But I'm sure it didn't. But I just wanted to just highlight that for you, that we have to go through that. It's going to go up and down. If you are someone that just wants to build wealth for the long term, you can just focus on investing steadily over time, not necessarily timing the market. If you are very in tune, which in time you will be if you pay attention to your investments, just like I have become that way over the last few years since I've started investing outside of my 401k. Last month, when everything was going on with Liberation Day and the tariffs, and there was just so much turmoil going on, I definitely had my eyes open and saw that opportunity in order to not just do my regular dollar cost averaging, but to add additional full shares as much as my budget would allow for. But you don't have to necessarily do that. You can just stay steady with your investments over time and allow it to build that way, because these investments, like I'm looking at right here, a VOO that tracks the S&P 500, historically has continued to grow on a steady pace. Now, according to historical data, and there are things that will impact it in a different way that we cannot reflect upon, like what we are going through right now with these tariffs, as well as going through COVID just a few years ago. These are things that are a little bit, well, not a little bit, definitely out of the norm. But overall, there is historical data to look back on and see that the stock market does always recover. Now, I'm not saying every individual company within it, but I'm saying as a whole, and looking at these top 500 companies, this is what I mean. Something that there's less risk, less worry, because it's not all left upon one company's performance. So crossing new all-time highs does not mean that it's too late. It often signals that we're going to be into the next leg of going higher. And the recent move, like I mentioned at the top of the show, this is only the 7th time that the index has had this type of breakout in this time frame in the last 75 years. So each time in the past, the 12 months following this type of pattern has delivered strong returns. So we have to be ready for that. And that's what I was doing last month by adding to my portfolio. And let's take a look. Let's take a little break and take a look at the chat. Thank you, everyone that has tuned in so far. If you are new to the channel and you enjoy learning and building wealth, being focused on investing, staying out of debt, investing for your children, getting ready for retirement, that's all I talk about over here. So subscribe to the channel. And if you haven't already, give the live a thumbs up. Now let's take a look. Thank you, Marlene, Eddie, everyone who is in the chat. Now, continuing to talk about the S&P 500 specifically, the average rate of return is usually around 13%. In some cases, the return was over 20%. We had that just recently, 2 years in a row at close to 25%. But this depends on the economic cycle that we are in, the different elements that we are facing. But as a long-term investor, we cannot be turned off to investing when there is a pullback, as long as we are in a place, in an age that we can wait on it to recover. And I'm definitely in that place right now. I'm in the building phase. So Marlene is saying it depends, right? It depends on what, Marlene? I don't understand your comment. If you can elaborate a little bit more. So the momentum is often influenced by earnings growth, innovations of the companies within this top 500 companies, the Fed policy, as well as interest rates. So many different things can impact the stock market. We've seen over the last few days what's going on between Trump and Elon and how that impacts his company. Now, as a shareholder into Tesla, I've often said, I'm going to hold. I'm still holding. If anything, I would have let it go when I was up over 100%. I'm not up over 100% anymore, but it's a company that I'm just going to hold on to long term. But if the day ever comes that I let it go, it won't be at a time like this when there is so much drama going on. Thank you, Elliot, for tuning in. And so the market, it's frustrating to see your investments go down, especially as your portfolio builds and the balance is higher. I know on my larger accounts, my retirement accounts, it was very frustrating seeing it down tens of thousands of dollars, but it has turned around. And I give updates whether the market is down, it's in the red or not. And I'm going to be coming with some updates soon. But I didn't skip giving my updates between January and now, even though things had really pulled back a lot. So after the S&P 500 crossed that $6,000 mark, it did briefly pull back. So we will see where we start the day off, where we start the week off tomorrow. But this is all normal. This is all an opportunity for those of us that are on the path to building our portfolios. You have to have your eyes open to it because it can give long-term investors a good entry point, as well as new investors. If anything, if I was a new investor, it might be confusing to me to want to buy when everything is, kind of beaten down, but you have to think about the long-term picture. And if anything, I would be glad to have the time that we had this past April, as well as even in May, as a starting point to building into certain positions. And I wasn't adding anything new during those time frames, but what I did was add more of the positions that I wanted to build up. So I never let short-term volatility distract me from my long-term goals. And I have to think about sticking to my goals once they are in place and not letting the news and all of these different factors impact me in order to so I can stay on path with building wealth and not ever sell a good quality investment while it's down from my all-time highs when it is something that could potentially recover. And I'm going to talk about a specific stock that I recently started adding more of to my portfolio that also hit an all-time high on Friday. But overall, I just wanted to talk again. This is a theme that I'm always talking about here on my channel of giving encouragement and perspective on long-term mindset on how to go about investing. If you're worried that you missed out, I'm telling you, when you think about the numbers that I was sharing earlier, 1,300 all-time highs since 1980. What might the next few decades hold as far as these indexes building and growing. These huge tech stock companies continuing to develop and be billion-dollar companies the way that they have been going recently. So think back to when the S&P 500, the index itself that is currently $6,000. Back in 1998, it was $1,000. In 2014, it was 2,000. 2019, 3,000. So an easy investment that can be your foundational investment if you want to mix this in with those individual stocks, but definitely something that has proven itself historically that no matter what the circumstances are, in time it continues to go up. So each time people said, it's too high, should I wait? You know, they watch it keep climbing. I don't want you to just be sitting on the sidelines and not get involved with investing because it's just a matter of making the right choices and sticking to them. I'm not saying that every investment is that easy, but for me, in my opinion, in looking at as I said, so much history to reflect upon on an ETF, a basket of stocks like this, you pretty much can have confidence that your investment, as long as you leave it invested long term, it will grow. And another theme that I love to share and something that I do on a regular basis, I have 2 long-term commitments that I'm working on right now, daily commitments, I should say, and that is gonna be $10 daily into VTI as well as Microsoft. And $10, these are additional investments that I'm doing outside of my retirement account because I have, my FIRE account, financial independence, retire early, or however you wanna put it. I have early retirement goals. I have true age, later in life retirement goals. I have investments that I've created for my daughter. So I have different reasons for investing. And the $10 a day investments go into my taxable accounts, my early retirement accounts. And so I want everyone to know that on most brokerages, you can invest small amounts, $5, $10 on a regular basis. And from there, you can really build up your share size if that's all you have to invest, whether it's for yourself or for the younger people in your family. You don't have to feel that you have to have thousands of dollars in order to invest. So I challenge you to not feel like be intimidated by a share amount and feel like I can't have that in my portfolio. I've shared that I had to get this out of my I was at that stage a few years back that I wanted to buy full shares and I had to let that go. And that's what allowed me to get started with investing into quality companies that I'm still holding today. Tesla at the time, this is before stock splits that have occurred over the last few years. Tesla was $1,200. Amazon and Google, thousands of dollars per share. I had to say, okay, I want these particular investments as to be a part of my portfolio. I'm going to have to go about it at $20 at a time, 20, 10, 5, whatever I could do in order to build up my positions. And I'm glad that I let that attachment to wanting to just buy a full share go, else I would have been waiting for years until the stock splits occurred on all of the investments that I wanted. And the biggest one that I definitely needed that stock split. Oh no, not a stock split. I needed to embrace dollar cost averaging into was Bitcoin because that one was tens of thousands of dollars, not just $3,000 just a few years ago. So I had to say, okay, I invest what I have to invest. I don't have to get a full share all in one shot. So focus on, if you're a new investor, you can definitely focus on broad ETFs, a VTI, a VOO, FXAIX if you use Fidelity like I do. So VTI is a total stock market ETF. VOO and FXAIX give you exposure to the S&P 500. And there's other investments like SCHD that are focused on dividend growth. And I have videos and I have been sharing my journey into investing into all of the things that I mentioned. But dollar cost averaging is a way that you can go. So what is Curtis saying? Facts, DCA versus buying Amazon, Google full shares, partial are key. Yes. Yes, if your budget allows for it and you can just say, "I buy a share every week," go for it. My budget did not allow for it, but in time, I was able to build up shares into all of the companies that I mentioned. And you can also, and not everyone I know has these. You have to get in tune with what your brokerage company has and take some time, do some research, make some calls if you need to, or feel free to ask me if I can. If I have an answer, I will try to help. But like over on Webull, you can automate your contributions, and you don't have to be worried about, you know, uh, remembering every day to make your investments. I did this for a stretch of time too. I was doing a set it and forget it challenge where I automated my deposits and my investments, and the app made them for me every day, 1:30 Eastern Standard Time. And I wasn't trying to time any entries there. That amount that I had allocated was going to be invested. But like I said, if you're somebody who does want to catch those dips and invest more, you can set alerts and do that too. But I think that you should just focus on investing steadily if you have a long-term mindset when it comes to building up your investments in your portfolio. So let me see. I'm going to take a little break. Again, thank you everyone who has tuned in so far. Please make sure to give the live a thumbs up. And let me take a look. Okay, looks like we're pretty on track with that. So let's take a look at some comments. Alicia, I'm not sure if I'm pronouncing that correctly. I'm trying to get to 150 shares in each. Is there a better way to build the retirement account? Well, I don't know what you're investing into, 150. I think you should be focused on what your retirement goal is. What is your retirement number that you're trying to achieve? Because share size, depending on what it is, my VTI share amount is much lower than VOO, and VOO is much higher than SPLG. So it all depends. But I think I often do touch on having share size goals for myself, especially in my taxable accounts. But I'm just in that building phase. But when it comes to my retirement accounts, I think you should focus on what is your ultimate goal, what is your age, and how you can go about trying to be on track to achieve that, and maybe just being in tune with the investment calculator, how much longer you're going to be working, taking all those opportunities to increase your contributions to however you're investing for retirement, whether it's 401k or IRA, however you are on track to do that. SCHD and Main Street Capital, I have both of those investments in my portfolio, and I enjoy the dividends and the growth, especially Maine. It has not disappointed. Did I cover the IPO on Circle? No. No, I haven't been talking about any of those individual stocks today, Curtis. CoreWeave, yes, that has been a real breakout. I don't have any of those in my portfolio. I haven't added anything new to my portfolio lately, but investments that are really thriving right now on their way up. Many things, Broadcom, AMD, Applied Digital. I don't have these in my portfolio because I just don't invest into I keep my investments narrow and I just try to build upon what I have. When I add something new, I want to make a long term commitment in order to build up the position, not just to have one share of it. So I'll have to evaluate if I want to incorporate something new and really give it the focus that I want. I do have in that kind of tech sector, I have Taiwan Semi, NVIDIA, and maybe one other, I can't remember. Special dividend for Main Street is coming. We're going to get 2 payments this month. Thank you for that update, David. David is always good with knowing the dates of the dividends hitting and has his dividend video out on the first of the month. Okay. Okay, so you're thinking about adding Coca-Cola to your portfolio? Someone just asked me a questions about Coca-Cola. They just recently had a share, uh, stock split. I think it was 10 for 1. Um, yeah, it's a dividend. It's a good dividend payer. But you have to make your own choices on that. I try to I don't have Coca-Cola in my portfolio. I have Maine, SCHD, SPHD, Realty Income. I have a little bit of all of the Mag 7, as well as some other individual companies like the ones that frustrate me, Target and Disney. So I have a mix of different things, but I try to keep my foundation at being those investments like the total US stock market and um, the S&P 500, especially my retirement account is very heavily weighted into FXAIX. So, but you have to make your own choice, and those are strong investments that pay dividends and will build for you, especially if that's the type of growth. I don't know how old you are. There's so many different factors to think about. So Elliot is saying, absolutely, I'm dollar cost averaging into long-term investing and investing. Oh, I'm getting tongue twisted. Sorry. Absolutely, I'm dollar cost averaging into long-term investments each market day. Okay, you're like me. You don't mind investing on a daily basis. I know that's not the highest choice when it comes to whether you like to do it on payday, weekly, however, daily. When I've done my polls and surveys, daily comes in last, but I do usually I have for the last several years now, I've had VTI on a daily commitment. And right now I'm also having Microsoft on it. Okay, so Vincent is saying, when it comes to the S&P 500 index funds, do we look for lower expense ratios? I definitely do, Vincent. And I got started with VOO before I discovered SPLG, which has a slightly lower expense ratio. So VOO is 0.03%. SPLG is 0.02. And then if you are someone who uses Fidelity, there is FXAIX, and there's another fund over there. I don't know the ticker off the top of my head. It doesn't necessarily say S&P 500, but it pretty much covers that those top companies. And I think it's a 0%, no expense ratio fund. So I definitely factor that into my plan on choosing what I'm going to invest into, along with the performance and other things of, what I want to have exposure to. But yes, I don't want my gains to be eaten away by these high expense ratios for no reason when there is potentially an alternative that has a lower fee. So I have to keep an eye open to that. And I've shared throughout some of my videos some bad experiences and things that I have discovered or helped family members discover that was going on in their retirement accounts where there was a better choice, a lower fee choice that they just were not aware of. And of course, the brokerage company is not going to bring this to your attention. They're trying to make some money too. So those fees are a way of them generating cash, but you have to advocate for yourself and have your eyes open to these things, especially as your portfolio grows and it's, $100,000, $200,000. You don't want to be in something that has a 1% fee. I don't want to be in it whether my portfolio is 10,000 or 100,000. There's no reason for it if there is the same type of exposure and growth and performance and another investment that I can make at that same company. I'm going to look for it and I'm going to make sure that I can get those adjustments made. So let me take a look. Thank you, Stock Brother, for stopping in and reminding everyone to hit the like button. Just take a quick look. Okay. So let me scroll up a little bit and see if anyone has Marlene is saying we all have to start somewhere. Yes. Don't feel like it's too late. Don't be intimidated by the share price. Know that you can have quality investments in your portfolio. You don't have to don't wait for a stock split. Don't wait till you have the full amount to buy the full share. You can go about it little by little. Okay. And what is David saying? Little amounts add up and builds consistency, which is what you need to grow your wealth. I agree 100%. Okay, let me see. Let me go back down. Rob, Rob, you're so silly. I see you in the chat. I purchased shares of YMAG. Let's see. Okay. Mainly because they're less expensive than the actual stock. Okay. Elliot is sharing a few investments that he has incorporated because he wanted a certain share price for his investing plan. I compare what they've invested and how much in each company first, then look at the expense ratio. Okay. I guess Fast Eddie was replying to Vincent's comments. Let me see. Thank you, Andre, for tuning in today. Curtis, I'm sorry, I did not prepare to talk about any IPOs or, let's see. There's nothing wrong with actively managed mutual funds that have a solid track record. If we stay choppy, then positive broad market funds may stay sideways and underperform. Okay, just taking a look at the comments and trying to get a handle on what everybody is thinking about and sharing here. Okay, so Marlene is saying, that's been my problem. I have to get over wanting to buy a full share. Oh, I'm glad I got over that one a long time ago. But yeah, even if you look at whatever the investment is, if you want to get to it quickly, can you divide it into 4 or 5, depending on the price of the particular stock or ETF. Break it down that way if you want to feel like I'm going to get to this quickly, But I am fine with just setting $10 daily, $20 daily, whatever you can afford, and just letting it build up that way. I'm going to give an update on my investing into VTI this week. And I think I started that. I think October of 2022, but I'm not sure. I need to look it up. Thank you, Nora, if you are still in the chat. Thanks for tuning in. Cruise Scratcher, thanks for chatting. So let me see what else I had in my notes, if anything. Oh, okay. So I said I was going to share a little bit about another investment. I already said it a couple times, I think. It's Microsoft. So right now, I just finished my first week. I've been daily investing into Microsoft. Now, it's a smaller position in my portfolio. I only had 2 shares. And so I'm going to take a little stretch of time and I'm going to be investing on a daily basis into Microsoft. But I just started that last week, Monday. And what happens on Friday? Microsoft hit an all-time high. So it was up around 467 to 470, I think. Let's see. Okay, so in the after hours, Microsoft is currently $470.38. So it has a market cap now of 3.48 trillion, and it has surpassed Nvidia. So this is an investment that I'm sure that we all have heard of, we are familiar with. It has had a 30% rally since April. So the stock price has climbed. They've added 800 billion to their market cap, and they still have growth ahead. So I want to build up a little bit more of it into my portfolio. Their revenue has gone up 21%. And they're exceeding the expectations. We will see what happens next time around or each time around when the earnings come. But different companies that do the price targets and the forecasting for them have seen growth and are projecting. For example, let me take a look at my notes. Bernstein has raised their price target to $540. Wedbush is saying that it is an AI leader. Different analysts are putting their price target up to about $525. So right now, they're pretty much anticipating another 12% upside from where the stock price is currently. So even though they hit an all-time high on Friday, like I'm sharing throughout this show, I'm not going to let that hold me back, because it's not like I'm trying to trade my Microsoft stock. I'm going to be building up this position and holding it long term so I can wait for the growth, the potential of it hitting 525 in the future. So I'm okay with that. So thank you. The one, is this the Fidelity fund that I was trying to think of earlier? The one is sharing in the chat, Fidelity Total Market Index. Oh, that's the total market, not the S&P. But yes, I have not invested into them. So this is FZROX. I have not invested into any of the zero funds investments over at Fidelity, but you can take a look and compare and see. The name might not be exactly the same, like I said, with the one that I'm trying to think of. It doesn't spell out specifically that it's the S&P 500, but essentially it's going to give you that same exposure. But the FXAIX that I'm invested into over there, my expense ratio is 0.015. So as insignificant as I could have gotten outside of flat out zero. So it was an improvement from my VOO that I was doing in my taxable accounts. And guys, I often get, I just want to just touch on this very quickly. I have different accounts for different reasons. So I might have something that gives me exposure to the same thing, but it's just in different accounts. And I had an opportunity to do it last month, but I was just still on my just still stuck with VOO. Again, I could have shifted over to the SPLG in my taxable account, but I didn't. And another thing, oh, the VOO and VTI, you can definitely choose one. I think I just looked it up. There's an 88% overlap between the two funds, but I do have both in my portfolio, and I'm okay with that. Okay, so David is saying, I'm hoping for Microsoft split, but I doubt it will happen. Okay. Yeah, my share size will, well, it's only at 2 now, so a split is not gonna help me much. Like, the split on SCHD got me over 50 shares. So sometimes it really can boost you, but, share size, it's nice to build, but you actually use your 100 shares in order to do your options and stuff like that. I've never done that yet, so Lisa, when you invest $10 daily, do you mean $10 every day the market is open or $10 every day of the year? When I say $10 a day, for me, I mean $10 Monday through Friday. If there is a holiday, I usually make up for it and just will do a double investment on one of the other days of the week. So basically, I'm saying $50 weekly if I'm doing a $10 investment. That's how I do it. But that's my method of doing it. If you wanna literally do it, every day that the stock market is open, then you do it that way. But no, I don't do investments. I don't make up for the weekends in my investments. But I have watched someone else's video here on YouTube, and that's what he did. He basically took $70 and, divided it out, and he during the week, he invested a little bit more in order to, make up for to get an investment that was gonna cover every day of the year, but that wasn't the way I do it. So you have 15 shares of Microsoft, so you wanna see that split, come and throw that up throw that share size up for you. But yeah, however you go about creating a challenge for yourself, I think it's just a matter of sticking with it and just building and growing, but I just shared how I'm doing it and um, my personal preference on how it goes with investing. So all right. Make sure if you're not already subscribed to the channel, give this live a thumbs up. Turn on the notification bell so you can keep up with all of my videos and live streams. I see often that notification is on, I don't know, something, not all, but turn it on to all. So, T, thank you for subscribing. You are a newbie to KGU. Thank you so much for checking out the live today. So, guys, I am usually live 3 p.m. Eastern Standard Time. I probably will be incorporating another live. I want to give something different a chance in the Discord. So I'll probably go live and give you guys a link to come up on the panel and just talk to me directly. But we'll do that. That won't be I won't be streaming that on YouTube when I do that, but I want to try to do something different for the Discord family. So, guys, if you have any other questions, please drop them in the chat. But I covered my topic for today, and that was just continued encouragement to not ever feel like what the title of today's show is. Is it too late to invest? Don't feel like it's too late. For you guys who weren't here at the top of the show, let me just run through something I was sharing. The S&P 500 has hit over 1,300 all-time highs since 1980. So these are the type of things, these are the type of stats that I was touching on throughout the show to say we just have to know that we're going to move forward. We all have a different starting point with our investments, and we can't think that it's too late when it comes to especially a profitable company, like I'm saying, that I've chosen to commit to my investments into Microsoft, as well as um, an index, the S&P 500, not just one company, 500 that are not going to be as heavily impacted by the turmoil and the tariffs and all of the things that can occur. In time, it does have its pullbacks, as we saw, which we had a drastic one that I was highlighting also. Um, that's it recovers, and just thinking that the move that it's made in just 8 weeks, we could have seen that as an opportunity. If you missed this one that just occurred, remember and keep your eyes open next time. There is so much drama going on. Um, who knows what may happen? Some news comes from the White House. Some news comes concerning a particular individual stock that you have in your portfolio. Just think long term and think to yourself, is this an opportunity for me to continue to build and add more and take advantage of what is going on now, with the potential of where or after you do your research, where this company is going in the future. So let me take a look. I lost my trust fund during the housing crisis in 2009. It was mostly investments. I'm scared to invest. I don't know where to start. My home sale is this week. I will make a large profit. I want to invest, but scared. CC, I think you should, if you have a relationship with a brokerage company, I don't know if you're working, I happen to be connected with Fidelity. So the first company I worked with, the brokerage company that I left off with them was Empowerment. And then the next two companies that I worked with, they happened to be with Fidelity. So when I got laid off from the second company, my money was already there when I went to the third company. So I was already enjoying my experience with Fidelity. So I wound up moving my Empowerment money there also. So if you're working, do you have a 401k or a 403b, or do you have an IRA of your own? Do you have a connection with a brokerage company? If not, I think you need to establish that. Get in contact with them. And I'm not talking about doing anything, paying for a financial advisor. That's your own personal preference. If you feel that you need to do that, I've never felt the need. And I think that in time, I've gotten in tune with the things that we've been talking about throughout this show. Getting yourself into a broad, a mutual fund, something that has broad diversification already built in, that has a low expense ratio. So you're not going to be, your investment is not going to be eaten away by fees. Or you can also explore with them incorporating maybe something like a mutual fund that gives you exposure to, the total US stock market, international, as well as maybe even putting in some into a target dated fund if you want that type of simplicity when it comes to your investments. But make sure you have your eyes open, make sure you're having a conversation. Use ChatGPT, do what you can to have some information when you have the call with them, so that you know what your goals are, what you want them to help you and guide you to accomplish. And so what brokerage company is your 401k through, CC? So there's just so many different things when people say these, like the little bit that you shared, it's like, I don't know how old you are. I don't know, how much you already have in investments. But just take the time. It's important. We have to take care of our older selves. I often say, look to the people around you, your parents, your great uncle or whoever, and their circumstances, how they're living in retirement, and think about how that can translate to how you're going to be able to be living. Now, things are so much more expensive than they were for others. Maybe they have their home paid off. Maybe their mortgage is a third of what yours is, if they have any at all, you know? So there's just so many factors that you have to take into place, but just take the time and do the work in order to make sure that you are on track. Um, but overall, I know your age and how long you have to retirement is a big factor. But yeah, I encourage you to not be afraid of retirement, of investing for your retirement, investing in general, because it is a way for you to build wealth. It is the American way, basically, the way that we've been shifted away from pensions. We've been shifted into this system of having to use a 401k or an IRA in order to have that tax deferred way of building our potential nest egg for when we get older. So let me take a look in the chat and see. What advice do you have on retirement accounts? Is it better to move it to something like the S&P 500? Move it from what to the S&P 500? I use the S&P 500 as a gauge of the performance. If I'm invested into target dated funds and different things in my in a retirement account, I use the performance of the S&P 500 as a gauge for me to say, okay, this is gaining 10% on this particular year. The S&P 500 is up 25%. That didn't make me feel like I was in the right place with my investments. So if that helps you to give you something to go by, I felt that I was in too much of a conservative investments for my particular age and the growth that I wanted. I did have some money in a target dated fund. But what I even did with that, I did leave it in a fund. Some of my investment account, I did leave it in the target dated fund, but I changed it to a date that was that had more exposure to stocks, because over the last few years, I feel that there has been a lot of growth there, and I didn't need to be so diversified into things that were not growing at that rate. But that was my personal preference. And yes, if you've ever seen any of the videos that I've shared, yes, I have shifted to having a substantial amount in the S&P 500. Substantial for me, it's probably a little over $150,000 right now, and I also have FXAX in other accounts, but I've been sharing one particular position in my videos here. So I'm talking right now to MJ's question about, is it better to move your retirement into the S&P 500? I think it's a good foundational investment. I use that as to kind of be stability and support to any of my portfolios. And then I incorporate the individual stocks, the dividend paying stocks that I wanted to have more direct exposure to. So budgeting the bacon. Oh, you usually come in as Nija. Hello and happy Sunday to you. Hello, Anthony. I am unique. Thank you for everyone that's chatting. I do have Cece, I do have a membership. I do have a channel membership. If you'd like to check that out, you can. And yes, I will talk to you more specifically on that. But please, guys, I am not a financial advisor. I am someone who has been putting more focus into this for the last few years. My life has changed. I have been laid off multiple times. I was very worried going into COVID and worried about my financial outlook for the rest of my life. I was worried if I was going to be laid off again. And it was just really a time frame. I often highlight that as a shift in what was going on with me, because I felt that I do not want to be as heavily reliant on corporate America as I was. And so I put a lot of focus into starting my real estate business with my partner, as well as focusing on being in tune with the performance of my investments, as well as creating different investment accounts for myself for early retirement and for my daughter. So the last 5, 6 years, it has been a new me. And I, like I say here, this is not financial advice. This is just me sharing my journey through the videos and everything that I share here. Um, but yes, I do have channel memberships, so feel free to check that out and get in contact with me if you are interested. I think I gifted memberships last week. I do try to gift memberships. That's just, the basic membership. I gift those probably every month. If you want to potentially get a 1 month gifted membership, you have to have that turned on in your YouTube settings. So sometimes I try to give those reminders on these weeks, and then next week I will gift memberships. But I like to give people a chance to turn that on so that the same people don't keep on getting the gifted memberships if they don't choose to join in between. What do you consider a low expense ratio for an ETF? Under 10%? Under 1%, definitely 10%. No. Did you forget to put 0 in there, MJ? No, I like expense ratios 0.03, 0.3, 0.5, 0.5%. Yeah, I have not. You would have to share with me what type of investment you would want to have, what performance of an investment that you would pay an expense ratio of, a multiple percentage, 1, 2, 3, 4. I haven't. I personally have not come across anything that I felt that I would pay that high of an expense ratio for. I have my adult children rolling their 401k into a Roth IRA because they're into crypto. Because they're into crypto. What are they investing into in the Roth IRA? Only crypto? I do have crypto in my portfolio. I'm not against crypto. I think I do everything. I do options trading. I do regular trades, shares. I'll do options trades. I have crypto. I have XRP and Ethereum and Bitcoin, mostly the bigger names, as well as FBTC over at Fidelity. So I'm not against it, but you have to create the balance that you are comfortable with in your portfolio. And crypto is not as significant as my investment into the S&P 500, for example. Very glad I have become mortgage free 2 years ago, because that way the economy is set up. The way the economy now is set up is a mess. That is an awesome goal that you achieved, Nija. Thank you for sharing that. Okay, let's see. Thanks for the input. No problem, MJ. I know I get up here and I'll be rambling on, but I'm glad that I attempted to answer your question. SBK, thank you for tuning in. Lisa, I have it up on my personal account too, a person in the chat. I support LOL. You got me all summer. Oh, okay. The summer it makes it easier for you to be here, Nija? Okay. Nija is a school teacher. I don't know exactly what she teaches. I don't remember. CC, no problem, CC. Thank you for asking the question, and thank you for tuning in. I appreciate everyone's support on my Sunday live streams. Guys, if you're new here, I'm usually live at 3 p.m. Eastern Standard Time every Sunday. Every once in a while, I do a pop-up live. I only wish I could start investing. I only wish I could have started investing at your age, Lisa. You're so way ahead of the game. Yeah, well, I kind of fell into investing. I have told you guys. Um, oh, you're trying to show your new channel, Nija? Okay, thank you. I am unique. Thank you for my membership. Oh, you're currently a member. Okay, drop some of those members emojis. I am unique. Did you get the membership last week? You teach tech teacher in a middle school. Okay, yes. So whose comment was I looking at? Uh, I am unique. I started working full time when I was 19 years old. So with that, I was my offered, to be a part of the 401k. So I didn't make much money at that age and throughout my 20s, but I was contributing something. So that was my start to my investing journey. And then I wasn't I was pretty much living paycheck to paycheck, especially in the 20s. Um, so, I'm glad that I was contributing something, and I'm glad that once I had the knowledge, I started to increase my contributions as well as um, getting better in tune with what I need to be investing in and making sure that the performance, the fees, that everything was in lines with my goals. And I had to set goals. I had to know what I wanted in order to get there. So, um, you know, we all have a different journey when it comes to everything in life. I was also a teenage mom, so everything that I did was a little bit out of order. You might have had a vision for your life that things were going to go in a certain order, but yes, sometimes it doesn't, and you just have to work with it. Uh, Let me go down and see what I've been missing. Are you still with the same company, Lisa? No, I'm not with that same company. I got laid off. I wish I was with that same company. I was just watching a show earlier this afternoon and I saw a product in the movie that was from that first company that I worked at, and I was thinking to myself, I wish. If I hadn't gotten laid off, I think I still would have been there. I don't think I mean, in my time there, I was at times, I was changing roles. I changed roles in the beginning. It was probably every year or 2. And then, as I got a little bit more, as the years passed, it wasn't that frequent. I'm not sure exactly how many titles I held while I was there, maybe about 6 or 7, different roles while I was there. But yeah, they were acquired by a different company, and then, that company that acquired us, there was a lot of redundancy in the different roles, and they were headquartered 2 states away from where I live, and so I lost my job, and that was very traumatic for me. And then I went to another company, and I worked there for 4 years, and a similar kind of a situation. They were decreasing their presence. They weren't acquired by anyone, but they were decreasing their presence in my particular state, and so I wound up getting laid off again. Um, I wish. And I had a great boss too. So, yeah, this is what I was thinking about earlier when I was watching the movie. I wish I was still there. I really, um, I really was not going to go anywhere. Especially I finished college while I was at that first company, and, thankfully, they worked with me because, working full time and being a mom and, having to do my I don't know how to even say it, my clerical, the type of jobs that I was doing, I didn't have, exposure. I didn't have the internship. I didn't I they really had to give me a chance in order for me to, transition into the financial accounting role that I had the education for now, but I didn't have that hands-on experience because from a teenage from my teenage years, I had been working with the company and not ever being able to, really have that cross-training opportunity. But I think I'm getting a little off track. Let me take a look at the chat. But, yes, that question, it really yeah, I wish I was still there. But let me take a look. I'm trying to get an emergency savings back before I start adding to my portfolio again. Patrick, that is a good plan. I often say that I want people, once they get started investing, to be able to leave their investments invested. And that's what we're talking about today is long-term investing, giving the stock market as well, whether it's your ETFs or your individual stocks, the time to recover when it needs to, when we're dealing with the drama in certain companies like Tesla, or just as a whole with the things that have gone on with the tariffs and things like that. But I've been saddened when certain people have shared with me that something came up and they sold their Nvidia stock, or a good quality investment that I feel that should have been a long-term hold. It had gone up for them, but if they would have held on to it, they would have been up even more if they had not needed it because of the emergency that came up. So yes, definitely, I think a good plan to have that emergency fund in place before you really get focused on investing. And another thing that has saddened me is people, once their investment account, their retirement account has really gotten established, probably into the tens of thousands at least. And then they need a furnace or they need something and they take a loan against their retirement account. And you have to think about the long-term potential of that. Is what you're taking that loan out really worth the fees, and or having to pay it back and lose out on the potential growth and interest that you could gain? The whole point is we're trying to put this money away to take care of our older selves. I've been in the situation. I've had to do I think I've had to do every type of car repair and house repair that you can think of. So I definitely know it's hard. I know it's not easy, but thankfully I've always found a way to do it without having to look to my retirement accounts, or even right now my taxable accounts that are for early retirement. Potentially, if I wanted to sell something from there, I can, but I haven't had to sell anything before it's time, before I wanted to, because I did prioritize having my savings built up. And with that, I have been making sure to, when things do come up and I have to use my credit cards and my savings gets depleted because I have to pay it off. I'm not gonna be carrying any interest. I'm not gonna be incurring any interest on my credit cards. So then I'll just take that time, and like you, I may have to pull back a little bit on my investing in order to replenish my savings, because something is always gonna happen again, whether it's, a leaky roof, tires, regular things, or out of the norm things that turn up. Like right now, I'm dealing with some plumbing issues. Um, Nothing too major, but you know, things are always happening as a homeowner. I'm sure if you are a homeowner, or even if like I said, the kids, the cars, my daughter's going to driving school, the bills are always going up. There's always something. Not to mention we own the Alphabet Boys. We owe the Alphabet Boys, the IRS, next year. What are we talking about here, Nija? Okay, let me go up and take a look at the chat again. Yes, that 401k loan got us too. The AC heating unit went out on our, and to get a new one was $27,000. It's hot here in Texas. There was no way around it, but there were implications behind it for sure. Thank you for sharing that, Nija. So in retrospect, what do you think that was there any other way that you could have financed it? Or did you just think, I have this amount of money, let me just take it from there and pay it back? Uh, because I mean, I've definitely had to finance things. Thankfully, and not everything interest free, but right now, I have established accounts with, say, Home Depot, for example, and usually when I have to buy a substantial amount of materials, or deal with a particular fix, if I'm able to use them for a portion of it, even if it is just some materials, I can tap into a 2-year interest-free or some promotion along with that. So that helps in order to not to avoid the interest payment. But then, you have to pay the contractor for the work. But any way that I can work around it, I try to do that. I have, but like I'm telling you guys, I really have had to do every type of repair that you can probably think of. I bought a house. My realtor, the house that I'm sitting in right now, my primary home, my realtor, she would say, here we go on Lisa's quest for the the worst house in the best neighborhood. Meaning, I wanted a fixer-upper. I wanted a house on a nice street in a nice area where I was comfortable and my daughter could go outside and play and have a little backyard and a swing or whatever. But at the same time, I needed it to fit into my budget. So in time, I had to do all the repairs. I've done windows, siding, roof, furnace, water heater, appliances. I really had to do everything. And the same thing with the cars. I was helping a friend with a car issue yesterday or the day before, and I was saying, yeah, I've had cars that everything has gone on it, even the motor that moves the windshield wipers. Um, I have had my running board on my Ford Escape rust off and literally fall off. Like, I've had repairs of every part of the car, or I've had to let the car go because it was just not worth fixing. And my Ford Escape, I don't know if you guys, I maybe I'll post my that short because I had this yellow Ford Escape that I've shared a story about. But my Ford Escape, it was still running pretty good. It was running good, but that rust is what was the last straw that made me get rid of it. And what happened was the the under part of the car was rusting, but on top of that, the hinges at the back window, they came, like, from the roof down to the back window, um, they were rusting. So I was like, "I'm gonna embarrass myself at work or somewhere, and this back window is gonna fall off. I have got to get rid of this car because I don't I had to say, I've done what I can. I've gotten out of it what I can. I don't wanna put any more money into it." But I had to just say, "Okay, it's time to let it go." But it was just silly stuff. I just didn't wanna have to fix the headlights and the rust issues, but it served me well. It served me well and allowed me to pretty much be ready to go and buy, I could have bought my next, little SUV outright, but I just put a substantial down payment on it and had a small car payment for a little bit. My car payment was like $135, but I could have bought the car outright. I just chose not to and just wanted to hold on to a little bit of cash. But let me take another look back at the chat. 'cause I don't know. Sometimes I don't even remember what gets me going on what I'm talking about over here, but I'm glad that I'm able to be up here live with you guys today. Thank you for going over to take time to answer all the questions. No problem, Anthony. Do you have any questions today? Anthony's the only person that missed me, that week when I didn't go live. He messaged me. He's like, "Lisa, I was riding my bike. I was trying to get home to watch your live, and you weren't live." I just bought my first stock of you bought your coin? You bought a coin, Michael, of XRP a couple nights ago. I wanna get into stocks and crypto. I really have no knowledge. Where do you recommend do I start to gain knowledge? Michael, I think you should make a plan. You can go to YouTube University. There are some great people that I think are sharing sound advice and information, but I don't really have a book or anything to point you to. Maybe Anthony can drop a book in the chat, but I think you should prioritize retirement above anything else. That's definitely what I do. Um, I wouldn't be doing any of the other things if I didn't feel that my retirement was on point. I wouldn't be doing the extra for my daughter or any other thing. Um, because there is no one that I think that is the biggest priority is taking care of your older self. You can only work for so long and you have a you know what lifestyle you wanna have for yourself and things like that, so I would just focus on that first and foremost. There are definitely guidelines and articles and things that you can take a look at, like on Fidelity or just to give yourself an example. I have videos on it. I've shared, for example, that by age 30, you're supposed to have 1 year of your salary invested, and, from there, they have, like, a breakdown at 35, 40, 50, 60 of how much you should have invested for retirement. And that alone is usually quite shocking to people to see where they're at, if they're on track, if that is your goal and your standard. Um, everyone's circumstances are so different. Like I can say certain things, but we all live in different states and have different expenses and different amounts of people dependent on us for financial support. So so many factors, but that is always my top priority. And crypto would not be an investment that I would be incorporating above anything that was a long-term investment for retirement or just something more basic and stable. But I do have crypto in my portfolio. I have done XRP videos and shared a little bit about what I'm doing with that. But I have I have XRP and Bitcoin and a few others in my portfolio. But I'm gonna hold on to those long term, but I'm never gonna be invested into it to the point where I am unable to be patient and let it recover. I've had Bitcoin in my portfolio, for example, to the point that, it's gone from, say, 60,000 to below 20,000, and now it's over 100,000, but I had it in my portfolio when it went all the way down to below 20, and, I didn't sell any of it, and I wish I would have added more of it, if anything, when it was down in the teens, but I was able to comfortably hold on to what I had and not have to have any worry about it. But yes, do some goal setting and make a plan on, what you wanna do long term. But I think knowing what your priorities are, how much you wanna have for retirement or whatever your investment goals are is the first point. We could have finance it honestly, but we didn't. We paid it back and paid off the IRS. Okay, so you had some penalties to pay too. Yeah. Yeah, I've always kind of just been able to find a different way of financing my repairs. It's not always easy. And some of the repairs did take years, many years to pay off. But yeah, I never tapped into my retirement for in order to do that. Thank you, Anthony. I see you in the chat. Okay, so Anthony did give me a book recommendation. So, Michael, a good book to start with is The Simple Path to Wealth by J.L. Collins. That is your book recommendation from my friend Anthony from About That Wallet. The one I can relate with you. I still have my 2008 Ford Focus. Okay, did I fall that behind in the chat? No, no, no. There's only two comments. Have you researched or invested in any Fidelity? James, no, no, we were talking about that. I have not. The lowest, I don't have any of the zero funds, but I definitely have been investing into FXAIX, which has a 0.015 expense ratio. Okay. So James is listing a few of those zero funds here. Like I said, no, I have not invested into any of them yet, but they could be an option for you if that is a priority to you of not having any expense ratio at all. There are things in there that definitely give you the exposure of what we're talking about here. The what I've mentioned today, like the S&P 500 or the total US stock market. Hi, what do you focus on crypto? I do not focus on crypto or Forex. Today's conversation is about long-term investing. We were talking about the S&P 500. I am not focused on either of those. I do have crypto in my portfolio. I have not done any Forex trading. And James is agreeing with Anthony's book recommendation. Thank you for that, Anthony. And thank you for chatting, James. All right, guys. So, yeah, feel free to share any other thoughts or comments that you have in the chat. And let me take a look. Please give the live a thumbs up if you haven't already. Um, so, Anil, the way I've been building my portfolio, uh, I am a member of Keen and Grace's Discord, so I've taken a lot of inspiration from what I've been following over there, and I'm sharing that because I did have to shift. I have made a shift in how I was investing over the last few years. So like in my taxable accounts, I'm going to use that as an example first. I was more than 50% invested in I had a portfolio on Weevil. I had more than 50% of my investment into Apple at one time. And Apple, it's a good investment. It did not Apple, Amazon, Nvidia, Google, even Tesla. Tesla is a more volatile one, but those investments, what else? Let's see. Meta, these investments have steadily gone up for me. But what I've shifted to do is to get more of a balance of an ETF of a VOO, for example, is the foundational investment I would say I have over there in order to have a mix of having my ETF and then all of my individual investments at a smaller allocation just for the stability, but I definitely wanted to have direct exposure to many different companies. And when I focus on those companies that I want to incorporate, I try to build up a substantial I try to give it time in order to build up several shares now. My portfolio, it is what it is. So I don't know what you would consider, but anyways, so that's what I'm doing. I invest into an ETF, low expense ratio, broad diversification ETF, and then from there I add those individual stocks, those growth stocks that I want to have additional exposure to. I also incorporate some dividend paying investments like SCHD, Main Street Capital, Realty Income, and SPHD, for example. And then in my retirement accounts, kind of similar thing, S&P 500 and mix of different things. But I'm being mindful of the performance and what my goals are, and so I will make sure to evaluate that and make changes as needed. But it's a mix of different things. Emil, what stocks do you okay, so I was just touching on Emil's question of what stocks do I focus on for the long term. So, yeah, for long term, it's mostly those top of the Fortune 500 companies, but, I'm open to and incorporating other things, but once I add it to my portfolio, I have to be ready for it 'cause I'm gonna wanna build up my share size, and that's what matters to me, so it's not just gonna be a small amount. I'm gonna have to take time to build into it, especially if it's in, outside of my retirement accounts, kind of my additional accounts. But in my retirement accounts, I have very few individual stocks. It's mostly a fund or target dated funds or a fund like FXAIX that I'm investing into. I do have some individual stocks over there. I also have an investment account for my business where I have FBTC. So, but I'm okay with that because I'm a person that I know is staying on top of it and watching my investments on a regular basis. So I would say just only do that if you're going to pay attention, um, so that you can not be diamond handing anything accidentally if things do change about a particular investment, that you can cut it from your portfolio if it's no longer in line with your particular goals and strategy. Tesla, yes, Tesla, Elon and Trump's little, what do they call it? The bromance that's been kind of having the little fallout. Yeah, it did lead to Tesla stock uh, moving quite crazy this last few days. Yes, Anthony is sharing some quantum type stocks that he has in his portfolio. We've had a live where he chatted more in detail about that. So, all right. Okay, so guys, we're coming up on a half an hour. Thank you so much for tuning in this week. I'm usually live every Sunday, 3 p.m. Eastern time here on this channel. So please, if you're not already, subscribe, like, hit that notification bell. Set it to all so you can keep up with my videos and live streams. I put out all types of content. I do shorts, I do posts on my community wall. I will try to get back to doing some more poll questions. Maybe I can use that in order to give me some ideas on what we can talk about on Sunday, as well as in videos during the week. So, Anthony, I do not have a $5 DCA monthly challenge. I don't okay, so I have been doing some $10 a day challenges. I have done a $5 before though, yeah. So whether it's 5, 10, whatever your budget works with, Emil. Um, we were chatting about earlier today that investing is for every budget, is for everybody. And we were talking about, just to give a recap if you weren't here earlier, that it's okay if you can't afford a full share. Most brokerage accounts today allow for fractional share investing, meaning if you can commit to $5 a day, $10 a day, that you can go about building up your portfolio in that way. And when you have more money, you can invest more, but you don't have to wait on having quality investments, whether it's stocks or ETFs in your portfolio because of your budget. Because if your budget only has X amount left, you can use that for investing because we have that flexibility today in 2025. We have so much advantages when it comes to being able to invest. I do most of my investing and trading right off of my phone, including my Fidelity account. It's on my phone. I can look at my retirement account. I can look at all of my accounts. I can deposit money. I can do everything. And I'm not, there's no huge fees. There's no hassle, there's no confusion of having to. I don't even know what it would be like in the 1980s or early 90s to make an investment. I have no idea. Uh, Other than signing up for your 401k at work. And when I signed up for my 401k at work, I doubt I even knew what I was going to be invested into. I'm sure in those first few years, I didn't know what my performance was. Yes, they sent me a statement in the quarterly statement, probably in the mail, but I didn't have an understanding. But now, thankfully, I do. And I've done much better to make those corrections where they needed to be made. And that's why I'm here to share with you guys so that hopefully you don't have to, as they say, you can learn from my mistakes. You don't have to make all of the mistakes that I made. And that's what I try to share with my daughter in life too. Like, I know you have to live your life, but I'm going to share this with you because you don't have you don't have to go through all of the things. I already did them. And I tell you, the outcome was not good. So I just try to help and share, whether it's financial or just life knowledge, in order to help those around me to not have to go through that. Uh, Let me see. All right, let me go down. Vincent, you have a great weekend, and thank you again for that super chat today. Yeah, I'm currently in final year of, let me see, dollar per day too. No shame in it. You are still making progress. Yes. Yes. I know Shalise, Mommy Trader, has her dollar a day investing challenge. And there's nothing wrong with that, whether you're doing it for yourself or, you can do investments for your kids too, even if it's on maybe those special months, their birthday month, Christmas, certain months, give them $1 a day into their investment account. How long you invested in your hair? My hair in uh I guess that's a compliment for me and my braider. I will let her know that I got a compliment on my braids today. Thank you. Let's see. We as parents want our kids to be better than us and what we did. Nothing wrong with that. Okay. All right, guys. I do not have central air in my house, guys. So it's going to be a hot summer because my studio is in the top floor of the house. But I made it through last summer and I will make it through again. And again, I appreciate you guys for tuning in. Always feel free to leave me any comments, questions, and please come back next Sunday and every other Sunday, 3 p.m. Standard Time, Eastern Standard Time, for my Stock Talk episodes. And I will see you guys next week. Thanks for tuning in. Stock it up, stock it up, stock it up.